Welcome to the Stock Market Daily News Podcast for Wednesday, March 26, 2026. I'm your host, recapping Tuesday's market action. It was a relief rally on Wall Street, with optimism over a U.S. plan to end the Iran war lifting stocks. At the close, the S&P 500 rose 0.54% to 6,590. The Dow gained 0.66%, ending at 46,429. And the Nasdaq climbed 0.77% to finish just below 22,000. However, the biggest stories weren't just about the day's bounce. Let's dig into what really drove markets and what it means for your portfolio. First, oil prices tumbled as traders hoped for an end to Middle East conflict. West Texas Intermediate crude fell 1.5% to about $91 a barrel, while Brent dropped 2% to just under $103. The initial 5% drop fizzled after Iran rejected a U.S. ceasefire proposal, but energy volatility remains top of mind. For investors, expect continued swings in oil-sensitive sectors and keep an eye on any developments in the Strait of Hormuz, as further delays could reverse this short-term relief. Second, the S&P 500 is flashing caution signals. Last week, the index dipped below its 200-day moving average, a level crossed at the start of every bear market since 2000. Analysts note only 2 out of 6 technical warning signs are flashing red, but risk is rising. Strategists recommend trimming your biggest stock positions by 20 to 30%, holding more cash, 10 to 15% of your portfolio, and rotating into quality names like utilities and healthcare. Now's a good time to review your stop losses, especially if you're heavily in cyclical stocks. Third, let's talk tech. Software stocks are suffering their worst valuation reset in decades. For the first time ever, software's forward price-to-earnings multiple has fallen below the overall S&P 500. The iShares software ETF, ticker IGV, is down over 21% this year, with fears that disruptive AI is pressuring traditional seat-based software models. Investors are now favoring companies building the AI infrastructure, not those simply adding AI features. If you're a long-term holder, this could mean major opportunities, but beware of structural headwinds. A quick spotlight on Robinhood, the popular trading platform sank almost 5% to $69.08, its lowest close this year. Despite announcing a $1.5 billion share buyback and securing a larger credit facility with JPMorgan Chase. Shares have slumped nearly 40% since January as crypto and tech enthusiasm fades, but Wall Street analysts still see upside, projecting a 12-month price target above $123. This is a key stock for the retail trading crowd. Finally, overseas trends show Indian equities are drawing bargain hunters after a sharp correction, but oil remains the wild card. Experts suggest focusing on fairly valued sectors like engineering, IT midcaps, and private banks, with volatility here closely tied to how quickly the Middle East conflict is resolved. In summary, the S&P 500, Dow, and Nasdaq all finished firmly higher, recovering recent losses, but leaving questions about volatility and long-term risks. Watch oil prices, technical signals, and sector shifts carefully. Up next, more geopolitical headlines, critical economic releases, and eyes on upcoming tech earnings. Don't forget to subscribe and follow for your daily market roundup. I'm your host. Thanks for listening, and see you tomorrow.